Hey everyone, welcome back to Corporate Decoder, the place where we break down the boring business reports to find the juicy stuff. This time we're diving into Balchem Corporation's latest 10K filing. And let me tell you, they have some interesting numbers to show. Before we start, if you appreciate getting straightforward insights from these corporate filings, make sure you are subscribed. We also have a Discord community linked in the description below where we dig even deeper into these reports. So Balchem Corporation, a company that makes specialty performance ingredients, has released its annual report for the year ending the 31st of December 2025. Think of them as a key supplier for things like human nutrition, animal health, and even sterilization gases. They operate in markets that are pretty essential, and how they do financially is a big deal for anyone invested in them or looking at the industry. Let's jump right into some key figures. We see here that their common stock is traded on the Nasdaq under the ticker BCP. As of the 6th of February 2026, the closing price was $173.16. Now this might seem like just a stock price, but it signals how the market values the company at that specific moment. Looking at how the company manages its own stock, we see they have been actively repurchasing shares, something many companies do to potentially boost shareholder value or signal confidence. Between the 1st of February and the 31st of March 2025, they bought back over 33,000 shares, and throughout the year, these buybacks continued with a significant chunk in the fourth quarter, totaling nearly 685,000 shares repurchased. This can be a good sign, showing they have cash and believe their stock is a good investment. Now, let's talk about where the money comes from. Balchem has three main business segments: human nutrition and health, animal nutrition and health, and specialty products. In 2025, their human nutrition and health segment brought in a cool $659 million. That is a solid increase from the previous year. The animal nutrition and health segment generated about $230 million. And specialty products rounded out the mix with over $140 million. Overall net sales for the company hit a massive $1.037 billion in 2025, which is up about 8.8% from 2024. This growth is a positive sign, but we need to see if it is translating to the bottom line. And it looks like it has. The company's earnings from operations, meaning the profit they make from their day-to-day business activities, also saw a nice jump. Total earnings from operations were $209 million in 2025, up from $182 million in 2024. That is a 14.4% increase. Leading the charge was human nutrition and health, showing strong profitability. Even animal nutrition and health, which had a bit of a dip in sales, saw its earnings from operations increase significantly. This suggests good cost management or pricing power in that segment. Diving a bit deeper into the sales figures for 2025 compared to 2024, all segments showed growth. Human nutrition and health sales were up nearly 10%, driven by higher sales in their nutrient and food ingredient businesses. Animal nutrition and health saw a 7.5% increase, with better pricing playing a role, and specialty products grew by 6.2%. Thanks to performance gases and plant nutrition, it's good to see broad-based growth, especially in segments that seem to be performing well. When we look at the gross margin, the company's profitability on the products themselves before other expenses, it is sitting at 35.7% of net sales in 2025. This is a slight improvement from 35.3% in 2024. While it is not a huge leap, maintaining or improving gross margin in a year with some manufacturing cost increases, as they mentioned, is a sign of a well-run operation. Operating expenses, which include things like selling, research, and general administrative costs, went up by about 5.2%. The company attributes this mainly to higher compensation and professional services. However, because sales grew faster than these expenses, the operating margin, which is earnings from operations as a percentage of net sales, actually improved to 20.2% from 19.2%. This is a good sign they are managing expenses effectively relative to their revenue growth. On the expense side, interest expense decreased significantly, going from $16.5 million in 2024 down to about $10.2 million in 2025. This indicates the company paid down some of its debt, which is generally positive for financial health, reducing the drag on profits. Their income tax expense increased, which is expected with higher earnings, but their effective tax rate actually went down slightly to 22.2% from 22.8%. This is a favorable outcome, suggesting perhaps some tax planning or changes in the mix of earnings across different tax jurisdictions were beneficial. Now, let's talk cash. Cash flow from operations for 2025 was $216 million, a healthy increase from $181 million in 2024. This means the core business is generating more cash, which is crucial for everything else the company does, like investing and paying back debt. In terms of investing activities, they spent $43.8 million on capital expenditures and intangible assets. This includes investments in expanding capacity and upgrading equipment, which is necessary to support future growth. They also made some smaller acquisitions. On the financing side, they had a net outflow of $152 million. This was largely due to share repurchases totaling over $107 million and paying dividends. They also borrowed some money but paid back more, showing a strategy of managing debt levels. The auditors highlighted the valuation of reporting units for goodwill impairment testing as a critical audit matter. This means that determining the fair value of parts of their business, where they use discounted cash flow models, involves significant guesswork. They have to make assumptions about future revenues, profits, and market conditions. The fact that the auditors had to really dig into these assumptions shows that this is an area where actual results could differ quite a bit from what is reported. Let's look at the balance sheet as of the 31st of December 2025. Their total assets were about $1.686 billion. Their cash and cash equivalents significantly increased to $74.5 million from $49.5 million the previous year. This boost in cash is definitely a good sign for liquidity. Accounts receivable went up to $143 million from $119 million. This isn't necessarily bad, as it often means sales are growing, but it is something to watch. Are they collecting this money efficiently? The allowance for credit losses, which is money set aside for potentially bad debts, actually decreased slightly, which could mean they are more confident in their customers paying up. Goodwill is a significant item on their balance sheet, standing at $816 million. This represents the premium paid for acquisitions over the fair value of the net assets acquired. The increase from the prior year is largely due to currency translation adjustments, which is common for global companies. But keep in mind, there is always a risk that goodwill can become impaired if the acquired businesses do not perform as expected. Retained earnings, which is the accumulated profit that has not been distributed to shareholders, grew substantially to $1.121 billion. This shows a strong track record of profitability over time. Scroll risk factors, operational risks I. Here is a unique tag I found. The rest may not be unique as this, and if it will be not found. I might need to change it now. What could go wrong for Balchem? The report details a lot of risks, and it is essential to pay attention to them. They operate globally, which means they are exposed to political instability, trade restrictions, and currency fluctuations. A big risk they highlight is supply chain disruptions due to global events, which could impact their ability to get raw materials and manufacture products, especially with operations in Europe. Cybersecurity is also a major concern. They talk about ransomware, phishing, and even the potential for AI to create more sophisticated attacks. A breach could disrupt operations, lead to data loss, and damage their reputation. They mention strong security measures. But as they say, the threats are constantly evolving. Competition is another significant factor. They face many rivals, some larger with more resources. Success often depends on product performance, quality, and price, and they acknowledge that if they cannot keep up with market trends or competitor actions, their demand could suffer. The price and availability of raw materials are critical. They use petrochemicals, minerals, and agricultural goods, all subject to market volatility. If they cannot pass on cost increases to customers, it will hurt their profits. They had some inflationary pressures in 2025, so this is an ongoing challenge. A specific regulatory issue is around ethylene oxide, or ETO sterilant they sell. There has been increased scrutiny on ETO emissions, leading to new EPA regulations. While they are confident their customers will comply, these new rules could mean higher costs and burdens, potentially impacting how and if customers can use their products. On the employee front, they have a strong focus on human capital. Their turnover rates for salaried employees are low, under 10% with a long average tenure. This suggests a stable workforce. For hourly employees, the turnover is higher at 23%, but they are implementing measures to improve retention. So let's bring it all together. Balchem reported a net earning of $154 million in 2025, up from $128 million in 2024, a solid 20% increase. This growth across sales and earnings, coupled with a healthy cash flow from operations and a strong balance sheet with growing retained earnings, paints a positive picture. However, we must keep an eye on those risks, particularly the global operational risks, cybersecurity threats, and the increasing regulatory landscape, especially around chemicals like ethylene oxide. The reliance on key raw materials also remains a point of attention. Overall, Balchem appears to be navigating a complex environment effectively. They are growing their core businesses, managing expenses well, and generating good cash flow. The increase in goodwill is mainly due to currency, but the underlying business performance is strong. The company is investing in its future with capital expenditures and seems to be a stable player in essential markets. Alright, that is our breakdown of Balchem's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.